do another session on Friday. Friday might be a really nice day.
That's perfect.
I'm recording this now though, so somebody might need to edit it or whatever. But I'm gonna just do another one. How much was that, y'all? That was 2 trades, $50. That's $100 in what? Less than 5 minutes. Less than 5 minutes. I'm gonna tell y'all right now, as soon as I hit 500, I'm stopping. Look where I'm at. 20 minutes ago, didn't I say I was $100 less? Okay. As soon as I hit 500, I'm done for the week. I don't need to trade no more. Now, granted, because I'm at a higher lot size, and this 10 is equal to this. That's what that is. Somebody asked that question. It's only because of my broker. And somebody else. Did y'all see? Did y'all see that? Y'all missed that, didn't you? That Nas one that just left. It was crazy.
Too crazy.
Oh, no, that was gold. My bad. That was gold. Nas is still here. My bad. That was gold.
Nas about to drop though too.
Yeah. Oh yeah, it's still going. We on it. Look at this downtrend that Nas is doing. This bot ain't stupid. You know, look at that beautiful downtrend. It's still dropping. It's gonna keep going. It don't matter. I don't care about this this drawdown, whatever. It's like 10:30. It don't matter to me. I don't mind. But I need y'all to be aware though. When you increase y'all lot size, just because it can make y'all that kind of money, look at where your drawdown can be. So that's why I'm telling y'all right now, don't come in here and think y'all can trade NASDAQ with $100 account. That ain't gonna happen. Not even with 250, not with 500. It ain't gonna happen. Look at what you're dealing with. Okay, I'm on a 5K account doing that. That's what I would say y'all should be at. I wouldn't even say $1,000 account is good enough. If you put in 1K, look at what your drawdown is going to be. That's staying near 30%. That's not good. Okay. And it's because of the balance in your account. You need to have a higher balance if you're going to trade something like this. See, that's why it's going in the negative. You see that little wick forming right now? That's why. But when you want to trade this and you see that, you need to make sure you have enough money to be able to handle this kind of swing. Okay, that's what that means. Now, if I go back down to that one, you know, it's going to be still that $5 thing. It don't matter, but that's the key. Even though you want to make good money, just know when it start going against you, it's just as bad. Okay. Now, the other thing is, I don't know my trade intervals. This is 115 pips. I'm going to tell you right now, 115 pips is probably $1,000 is what it's going to look like if it goes against me before it generates another trade, you know, to help me make my money again. And if you got to pay attention to your margin, all right, I'm at 224 right now. If I put another trade on there, it's probably going to be a 20. So I would just double that. So technically my margin is going to be almost $1,000 sucking it up. And you see, I got a 500 times leverage on this. All that stuff comes into play. So just because I'm making money in 5 minutes, as you can see, that can come right reverse back on you. That's why your lot size is very, very important. And besides, I'm in demo right now, so I'm testing this. But this was that. And what else was I going to show y'all? Oh, I was going to show y'all gold. Gold's sitting there waiting too, by the way, because it made its money. Here are my gold settings. So I have it at a 0.1. I actually did input an interval of every 250. This is actually $2.50. Okay, so every time gold moved against me, $2.50, it would generate another trade for me. That's how I have it set. I know gold is in a trending market right now. And again, my profit for the week is $500. And then my target profit is $5 per trade based on that lot size. Okay, so that's what that is for my gold settings. That's not default. So the pips one, the interval of pips was not default. So let me go in here and see how long ago that gold trade was sitting. And if I can approve that, I might be cool with it. It's only been 5 minutes. I'm gonna go ahead and approve that. Throw that back on there. So really that's variable. I mean, it's a little more powerful than Alexander in the sense of I do not have, I would actually, I'm not going to say it's more powerful. I'm going to say it's different in the sense, look, I'm about to hit $5 again on that. It's different in the sense that when you're having price go against you, good Lord, that gold trade was less than a minute. um, when price goes against you, it'll just start putting those sales in so that you can go ahead and make up your profit with the more higher lot size, like that form of hedging, but you do not have an opposite engine to put you in a buy. Alexander does that, variable doesn't. Doesn't mean that it's better or anything. It's just a different EA and it works differently. It also has other risk management that you can see here that's different from Alexander as well. So, and variable takes a look at your entire account, just like Alexander, and sets your drawdown limit. Okay, so I have mine at 50%. Am I going to do 50% live? No, I will not. I actually stay 20 to 30% now. 30% is actually a little bit too high for me, but I like to keep it down at 20%. 20 seconds. Yep, Ulysses, that's what it was. Chris, what you say? Do you just use gold and knives or do you use it for currencies too? I know there are people that use it for currencies. I'm actually, me personally, I'm kind of going away from currencies. And this is my thought process on currencies. When you are a beginner trader or you don't have a lot of experience in trading, go to currency pairs because they offer low risk, okay, and they're also, but because of that low risk, they're not as profitable. You have to have bigger moves to make money that is equivalent to you trading gold, oil, and the indice. Okay, I personally don't do currency pairs no more because I've been doing it for 4 years now, and I actually only trade one currency pair consistently now, and that's because I know it inside and out. The other reason why is because the same amount of energy it took me to go ahead and put this on variable is the same amount of energy it would take me to go put it on a currency pair. When gold is more profitable than a currency pair, why don't I exert that energy on the more profitable asset? That's why I do that. So, and then, but it's risk because just because gold is making me money, I need to be aware of gold to know how it moves. You know what I mean? So, like for instance, everybody want to trade Euro USD. I personally don't even like that pair. Me. That's my opinion. I don't like that pair. I don't like that pair for the very reason that everybody likes to trade it. So I told y'all before in another call, brokers be hunting trades, okay? Because they sell information to banks. Banks want to know where your take profits are, where your stop losses are. That's market manipulation. That happens all the time. It happens all the time. It don't matter. So it's not like you being a trader, like you're not gonna make no money because of market manipulation. No, 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 no. That's not how that works. Everybody gets manipulated somehow. Share prices get manipulated all the time. So if you bought stock in something, you don't think that the CEO of that company is not talking to his accountants and talking about something, okay, we need to do something to make the share price go up, or we need to do something to make the share price go down. We need to have some sales because we need to take some back of our shares. That's a clear example of market manipulation within one company. Now multiply that by hundreds of thousands. That's what happens in these financial markets, right? So brokers and banks and financial institutions and hedge funds, they buy data to see where all our trades are. So if everybody's trading Euro USD, what do you think is going to happen? If everybody's in a bunch of sales and the bank comes through and like, no, 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 we need to bring this price back up. What they're going to do, they're going to do a huge move of money to bring more volume into the market on Euro USD and boost the price up. And what does that do? For all y'all that was sitting in sales, y'all going to get rinsed. That's what that does, okay? That's actually one of the benefits of why this is empty. The bot is going to go ahead and close it based on what it thinks. I took it upon myself to tell it to close when you hit $5, but you could leave that blank too. Okay, I want y'all to peep that. That Nas was up like $500 and then it dropped back down again. That's nice. But that's one of the things about currency pairs and things like that. So back to the other thing, why I'm doing not currency pairs. The gold is worth more money, silver is worth more money, oil is worth more money. If I can make this bot, that's why I said earlier, if I can make this bot run gold for me, why the hell not? Okay. If I can make, now that I see it on Nas, if I can let gold run NASDAQ for me, why the hell not? It's the same amount of energy that I put into a currency pair, then, and I make more money this way, why not? The only thing I have to take into consideration is my risk. So I would not suggest anyone go start trading US NASDAQ until one, you got the money for it. Okay. And then two, you are able to sit here and handle that risk. Because I'm going to tell y'all right now, when that thing was sitting at $500, how many of y'all was looking at like, I don't know if I want to do that. Okay. That can happen on these little runs right here. Things like that happens. Drawdown happens. You can't get away from drawdown, by the way. So don't think that you ain't never going to be in drawdown. You will. It's just that, can you tolerate that drawdown? Your risk tolerance. So that's why you also have to always make sure that you got your lot sizes right. And here's something real easy I can show y'all. Oh, what is that? Oh, gold just made my money. That's what that did. Let me go ahead and put that on there. I'm just racking up, y'all. I don't know if y'all see that. I'm close to that 500, and then I'm stopping. Is there any questions while I'm waiting for this real quick? And then I'm gonna show y'all something about lot sizes. Okay, nothing else so far. I
Jackie,
have. Oh, go ahead.
I have a question. I've been trading for about 24 hours. And given that I'm so new, what time frame do you suggest I trade on using variable?
Variable actually does not matter on your time frame. You can actually use whatever time frame you want. This particular bot doesn't care. I just made more money again. um, this bot doesn't care. So on variable, you're fine with whatever time frame you want to put on your chart. Because he doesn't take into consideration. The bot actually does other things. It doesn't go based off of your time frame. So that would help in that sense.
That is
However,
amazing. I'm asking questions like this, Jackie, because a lot of people won't ask questions. I
I
actually
know.
have on my phone, I have it streaming live on another group that I have access to, and they're
Mm-hmm.
asking me questions about it too, depending on joining us because they want to see consistent results. And I'm telling them, in order to have consistent results, you got to be committed to monitoring your charts, be committed to using multiple expert advisors and things like that to ensure that you're making money in all angles.
That's
So
right.
I'm gonna ask a lot of dumb questions on purpose because I know people are scared to ask questions. Y'all do not be scared to ask questions. That's why we do these live chats and these live training sessions.
Absolutely. I Please ask questions or what, even if you think it's dumb. My mama told me the only dumb question is the one that's not asked. That's what my mama told me.
Facts.
Big facts.
So please ask the questions. And if even if you feel like it's out of the norm, or maybe you don't want to talk about variable anymore, I'm pretty sure everybody's wondering when the heck is Gearbox coming out, right?
Oh my
Don't
God.
know. But it's supposedly it's almost done with everything. And I think there was even a post about it that it might be coming out this weekend, you know?
They did the API. I'm actually in the beta group, and it's coming so soon. I have not lost one trade. I'm just gonna
Ooh,
leave it like that.
go ahead. I love it. Okay, what's up? Hey, Muhammad, what's up? Can you change from Alexander to variable? Yes, you can. I would not. Yes, you can, as long as you are in the marketplace. So make sure if you guys have not switched to the marketplace, please do so. Two reasons why. First reason, if you do not switch to the marketplace, you will not be able to take advantage of the discount in price, by the way. So if you don't switch over to the marketplace, because everything kind of dropped. Switch over to the marketplace so that make sure when your subscription comes up, you take on the new discounted price. If you don't, you're gonna still pay that regular price it was before. That's been confirmed. And then second, yes, you can change from Alexander to variable. I would definitely suggest to not switch EAs midweek. Don't do that. Just start a new EA in the beginning of the week. That's just something that I think is logical, honestly, in my opinion. Other people might think differently, but I feel like you already in the middle of the trading week. You don't have data to see if the bot did what it was supposed to do for the week if you started on a Wednesday, So
No, no, Jackie, it's for future references because I have Alexander right now analyzing Euro JPY, USD JPY, and Euro USD.
mm-hmm.
But because I've been trading for a while now and I'm on the same road you are, where I want to switch to indices and commodities because I can handle the risk tolerance.
Mm-hmm.
So that's why because you were nice enough to help me when I PM'd you.
Yes, I
And now I'm
remember.
wondering which because I'm on the marketplace page now, so I'm just wondering which AP should I opt for?
Which access pass?
Yeah.
The access passes would be based on how many EAs you want to run at the same time. Okay. So if you only want to run one EA at a time, then you would do the lowest one, the one licensed one. Now,
Okay.
and when I say one at a time, I mean simultaneously. So when you get the pass, you have access to run any of the products, right?
Okay.
That one license is for any of the products. You can only just run one at a time. Okay. So if you go for the next one up, which I believe is two licenses, what you could then do is have Alexander and variable running at the same time. That's what that means.
Okay.
And then as you go up and up and up, then you can have all of them running at the same time simultaneously. But if you only have the one license, then you could say only run variable at one point in time. And then if you want to switch, whether you want to do it in the beginning of the week or in the new or in the middle of the week and switch, you could still do that. It's just that you would switch from, say, variable to Alexander or Alexander to Stratomus or whatever's available at that time. That's how that switching takes place. That makes sense?
Oh, yeah, that does make sense. And the other question I had, so my billing day is today
Mm-hmm.
on Alexander. So given the video you were kind enough to send me as well, I was going through that last night. And now because that was more focused towards Gearbox.
Mm-hmm.
And now I'm just looking, okay, because I'm setting up another account where it's just only going to run AI because
Mm-hmm.
I was practicing Alexander on the demo version to see, okay, what parameters work for my style, what kind of swing style works for me.
Mm-hmm.
And now I'm just wondering, oh, if I switch it to, if I get two passes, will the cost stay the same or will it increase?
That will be the silver package, correct?
Yes.
I think it's the same, actually. So it's actually a benefit. If you're used to paying the current cost now, you actually get somebody's drawing on my screen. um if if you're comfortable with what you're paying right now, then the benefit to you would be you're going to get two licenses instead of just the
Okay.
one. Yeah.
Okay.
And then make sure you got to also, that VPS is also in there as well. That's a fixed cost.
Okay.
Yeah.
No, because I will message you after you're done with the call as well because I have more questions and I don't want to take too much time because so many people have other questions as well.
I can understand that. Absolutely. Go ahead and message me. Today is a better day anyway.
Okay, perfect. Because I just need to I'm just trading right now and just you please continue the call and thank you so much for giving me all the information and I'll message you personally soon.
Cool. No problem. I'm actually
Perfect.
really happy right now because I would actually
What
be
that Nas
trading
is doing now?
S&P. What happened? Yeah, you see that, y'all?
Look at what that Nas is doing.
Look,
Mm-hmm.
look, look. That drawdown
Mm-hmm.
disappeared, ain't it?
Yep. Look at that. That's beautiful. You know what? And I trade S&P 500 manually. And you want to know why I did not put that on here? Because Nas has moves more pips than S&P does. And so, but my issue with NAS is I don't like the drawdown manually if I was to take the trade. So that's another reason why I put this on a bot. Let the bot trade it for me. And I'll just take the easier one and trade that one manually myself. Because by the way, y'all, passive income. This is passive income I've generated today utilizing this bot. My active income is my manual trading. What y'all think is going to happen when this bot starts making more money than I can manually? Crazy. Look
Then
at
it
that.
just switches. Your passive becomes your main.
Exactly. And then what am I going to do? Not a
Just relax
daggone,
because it's automatic.
not a daggone thing. That's right.
Travel,
That's
eat
it.
out,
Exactly. Chilling. That's how it was
chill.
before. It was like that before. I had manually traded for a while, but one of the bots I had, it was gone. I was like, oh, well, gotta go back to manual trading, which leads me to another thing. You still should know how to trade. That's just my thought process. I think you should still learn to manually trade because a bot is going to work. And then what happens when the bot stops working? For some reason, what happens if one day there's a shortage or an outage or something on the bot or whatever? How you gonna make your money for that day? You just gonna sit there and twiddle your thumbs until the bot comes back on again? Boom, gold just made that 5. Nas getting ready to make that 50. Okay, so yeah, it did. I think it just did that as I was switching the screen. Oh no, it went back. Okay, but anyway, so what I was saying was, that's why I stress manually trading as well, and to just learn that in addition to using the bot, because bots come and go, and this bot right here seems to be very powerful, by the way. I'm very impressed in the way it's handling this market. I'm impressed, one, because it can handle a trending and a ranging market, which not all bots can do. And then I'm also impressed in the sense that it caught that $50 on Nas is done. Whew. I think that's $200 a day on Nas alone, y'all. That's crazy. But you got to be able to handle that drawdown in order to make that 50. Otherwise, remember when that drawdown was at $500? If it was at the smaller lot size, then that 500 would have been a $50 drawdown. And you would have been like, oh, that's $50 to make $5. That's not really a good risk to reward ratio. Not necessarily, no, not in that respect. But when I got 5 trades back to back, only that one time where it hit in the drawdown, that risk to reward ratio turns tremendously. So I just wanted to make sure I threw that out there as well. But anyway, so yeah, manually traded in the spot. Come on, y'all, with any other questions? Let me see. Oh, you're welcome, Shane. You as well. Yes, Porter. Do I use Eris? And what strategy fusion, or do you have my own? Yes, I do use Eris, and I have my own strategy. I don't I did not I saw the fusion strategy, and I take pieces of that strategy and made my own. And I also utilized pieces from the Hawkeye strategy as well, because when I first got started with wedges, Matt was the one. And if y'all have been on that Hawkeye call, it's Matt and Al. Matt was the one that actually taught me how to draw the wedge, and he's the one that taught me how to take those alerts. So anything that I do, Matt was the one. Matt Pino, that's his name. That was the guy who taught me how to do what I do now. And I mean, I've evolved from what he initially taught me, because there was things on there that didn't sit with me, that wouldn't help me with my trading. But I can't always make sure I give out my respect to Matt, because I wouldn't even know anything about it if it wasn't him to sit me down and teach me. I'm just coming back here because I think I have a gold sitting here waiting. And yep, yes I do. I want to make sure I caught that. So I can go on Eris if y'all want me to. I'm in demo right here now, so I'm not even really worried about that. But Is that okay? You want me to go to Eris real quick? I don't hear no response. Yes, okay. All right, so Eris, same place in your back office, but it's under notifications here. And that 4:15 a.m. Eastern time. So when you're in here with Eris, so by the way, Eris is wedge alert software. This is the manual trading alert software that Avoria Prime offers, which I do trade with. I actually have YouTube videos on Eris more than I do on the bots. Because this is manual trading, you can interact more with it. I don't really do a lot of videos on bots except for my review on them, because I mean, you can't really, there ain't much to talk about when you're just looking at it, right? So I'm about to make $5 again on gold, y'all. Dang, look at that. That's beautiful. Let me accept that trade notification before we go into Eris. By the way, y'all, that AUD USD 415, we're going to go ahead and draw that one. And I want to compare that to gold and see what gold did. Because I think I saw some talks about AUD USD went down. And if y'all remember, AUD USD is what? Positively, highly correlated to gold. So whatever gold was doing, AUD was doing it as well. So if you saw gold dropping, then this was dropping no matter what this wedge told you. You should have been looking for a sell. I'm going to just say that right off the bat. Okay? So let's go ahead and draw that. Where I don't want to do it in this one because that is my variable running, and I do not do manual trades in with my other bots. Let's go into my other VPS. And this is another demo. So yeah, this is my S&P 500. Woo, look at that drop, y'all. That's a beautiful drop. Ooh, it did hit 32.90. Ulysses, if you still on here, that was a take profit that I had called. And it passed it. Woohoo! I just want y'all to, okay, I know I got a little excited, but I just need y'all to see this. So I called, this is Monday. I called this trade.
That's beautiful.
So I caught that on Monday. And then I caught this yesterday. I got about here. Okay, I didn't catch the whole thing, but I got here. And then this morning, I did not catch all of this. I caught up to here, and I took the trade last night. But I just need y'all to see this. Those are pips, by the way.
For real.
The middle number, that 130, that's pips. Okay, but look at how look at this drop, y'all. That's 918 pips, and the day ain't over. Look at it, and this is Fibonacci. So yeah, so I'm gonna let me just throw this out here to y'all real quick. Let me just throw y'all something. So I've been learning, I've been evolving in my trading, right? So I told y'all I only used like the MA cross. That was like my only manual trading strategy for like 3 years. Bread and butter though. It never failed. And that's why when I post those FX blues, I look for golden and death crosses. That's when the 20 EMA crosses over the 100, or sometimes you can even do the 100 over the 200 EMA. Golden and death cross. Golden cross means it's going up on a long-term uptrend. Those are long swing trades. Death cross, opposite, long-term downtrend. I look for those all the time. Okay. This right here, Fibonacci. Google it. I'm not going to go into further explanation because I can't honestly explain it all the way. But this thing right here, when you have a trending asset, you utilize basic math to just catch the trend, y'all. And I'm gonna just show y'all real quick. And then I'm gonna go to Eris, okay? But I really think y'all should really pay attention to this, because this right here can change your whole manual trading thought process. And you could utilize it Not only with, you can utilize it with errors, by the way, too. So I'm on a daily on S&P, right? So what you would do, insert Fibonacci, and I'm going to expansion, that tool. And here, look at this beautiful downtrend on the daily chart on S&P, right? So you know it's a downtrend compared to this uptrend that it did, right? But you don't know if it's a retracement or if it's an actual change in trend. So what I would have been doing is just looking. I would not have jumped into any of this, right? This right here, when it stopped, that tells me we in a downtrend because this was just a retracement. Boom, here we go, we're going down. So what I would do is when I came in on Monday, I did this. Start from the top, go to the bottom, low, low, low. Okay. Let me change this color so y'all can see. This is going to change how y'all trade. I'm telling you. Boom. Property, color, no, fiber levels, color, blue. Watch this. All right, those are my fiber levels. Top of the trend, bottom of the trend. Take this, bring it up to the top there, make it even. These are your fiber levels. So your trend stop right here, 100%, right? Normally a trend will go from either to this line or to this line, okay? This is your retracement, okay? When that thing finished retracing, you bring that down, and then the next day, put in your trade going down, and then this is your first take profit, this is your second take profit, and this is your third take profit. Y'all see that? Now, this is how you would calculate it. First take profit. How many pips do y'all see? That middle number is 669 pips. First take profit. Second take profit. Now you at 1226. You see what I'm saying? 1,226 pips in 2 days. That's a swing trade. But now I'm gonna put that to y'all in numbers. On a 0.01 lot size, that's $122.60. On a 0.1 lot size, that's $1,226. And then on a standard, it's 12 grand. Y'all caught that? Power of Fibonacci in math, y'all. Practice it. For real.
How are you the only one who was able to teach me that junk? Like, I've been trying to learn this thing forever. That's crazy.
Yep.
Oh my gosh.
It's a swing trade. But that's off of the daily. You can do this off of the hour, off of the 15-minute. It's the same thing. So just do the same thing on the hour. What you would just do is you would just measure a smaller downtrend. That's all you would need to do. So I'll take this off. How many? Come on now, y'all. Y'all don't think that thing is going to reach down here?
Oh, yeah.
Look at it. Look at where the previous low is from a trend. Right here. And normally price always reverts back. Come on now. That thing is coming way back down. Eventually. It might take a couple of days, but it'll get there if you want to hold that trade that long. But for 2 days, I just held a trade and made almost 1,300 pips. How many pips are you supposed to make in a week for a 6-figure income? According to the Pipology compound plan, you only need 75 a week. In 2 days, you can generate 1,250. You just made yourself, what, almost 4 months worth of pips in 2 days. That's all you needed to make what? A 6-figure income. You don't need to trade every single day, and you don't need high lot sizes to make money in trading. You just need patience and take your emotion out of it. And that's how you manually trade. And then you use the bot to do passive trading for you. Attack the markets both ways. And you good. This ain't no scam. And this is math. All this is just basic math. Probability, averages, math. That's all it is. Because what? The market is based on what? Human emotion. Plain and simple. All these people want to buy and sell. All that's human emotion. Exactly. So now that was off of the daily, right? So let me show y'all how to do it on like an hour or even a 15
Yes,
minute.
please. Oh my god.
So here's that downtrend, that hour downtrend, right? Okay. This right here, consolidation happening. Y'all see that? This is Asian session, by the way. I'm on the hour chart. So these period separators is telling you each day on the hour chart. And this is Asian session, consolidation, right? Here was my downtrend from yesterday. And then it decides to try and come back up, right? So you could technically say this is your retracement period. So what you're going to do, you're going to go ahead and put your Fibonacci on there. Expansion. Expansion is the one that gives you the 3 points. Top, very top, this candle. Bottom of the trend. That's all you got to do, right? Get me in here. Make sure that was the top. I'm going to bring this up to equivalent to the top of that first one because I want to see my 100%. I want my 100% right here, right? That's my bottom. That's my 0, okay? Soon as price breaks this 100%, put your sell in. You could do a sell stop. You could do whatever you want. But put your sell stop in here as soon as the candle closes, right? Put your sell stop in on right here. You might have a little bit of drawdown, but then look what you got. Boom. This your first take profit right here. That's on an hour. How many did you make? How much you make? 276 pips in an hour. In an hour. And you only need one line. That's it. That's it. And if you want to come on down more, you would come down more based on you having had drawn this line on the daily chart. So that's why you need to know your overall trend, okay? And then you already know where the 161.8 was going to be. It was way down here below, right? If you did it on the daily, then when you go down to the hourly, you redraw it again for the smaller trends. And then you have your little take profit. And then if you want to just let one hold and let it keep going, because you know on the daily, it's a continually long trend, take most of your profit here and then let a little one, you can let an old one just hang on down. That's still another $100 on a 0.01. That's a Fibonacci one for y'all. Now there's more advanced ways to use this that I'm doing, but that's the easiest, most simple way that I could tell y'all right now. And you should be able to get started with that and demo it and practice it and learn it and then go forward. And then when you want to come back to me and I'll tell you a little bit more advanced stuff that I learned, that we could do that. But right now, all y'all need to do is learn how to put in your trade and go from one line to the next. Show me you could go from one line to the next. Okay? And make your profit. And then if you could show me, you could do your one line to the next, and you could show me you could do that consistently, and you don't go over 10% drawdown, I can then show y'all how y'all can go get a funded account so that way you don't even have to trade with your own money anymore. So now what are you doing? Now you trading with other people's money, making money manually off of a simple technique, and you got a bot running in the background generating you passive income. And if you got the money for it, then you got $50 per trade doing NASDAQ. And I'm going to tell y'all right now, funded account, $15K minimum. I'm working on FTMO right now where they're going to give me $50K as soon as I finish the challenge. $50K, y'all. And it's not my money, it's their money. What you think I'm going to trade with? I'm going to do this. And they're going to split the profit with me, what, 60, 40, 70, 30? The 60 coming to me, and I could generate 10 grand a month. That's 6 grand. You mean to tell me off of your first check, you can't take 5 grand, put it in an account, throw variable on there and start trading NASDAQ with that $50 now per trade? Come on, y'all. I need y'all to just follow me with the plan. Because I'm telling you, exactly. It's the key to being successful in trading is not trading with your money, because you are too invested in your own money. Your emotions is too involved. You're going to sit there and wonder, man, that $100, man, my drawdown is 20%. I can't take it. How you going to feel about that if it's somebody else's 20% drawdown? You don't care. You know what I mean? Exactly. There you go. That's what I'm talking about. I know we went off on the stands. I'm sorry, y'all. When I get excited when I talk about trading, I had to show y'all that. Like I said, this is basic. So just practice that. You can show them you go from one line to the next, catch profit consistently. And this is on an hour chart. So you're going to have to hang a little bit. Okay. And by the way, do not set a take profit. Don't do that. So, and the reason why I say it is because I don't want nobody hunting for your trades. Don't set no stop loss and don't set no take profit. I'm saying this manually, and I'm saying if you're going to use this strategy and do it in demo and practice it, just practice that. So you are going to have to watch the charts when you do manually, if you can do that. But anyway, let's go to errors. Sorry about that, y'all. I got excited. So AUD USD, we're going to do this chart. We on the 15-minute. Let me set my chart up for y'all because I don't like it when it's all black screen like that. Let me change it to black and white. Put on my little chart shift, candlestick, period, get rid of the grid. Boom. There we go. Let's get in there. We on a 15-minute chart. Whoo, look at that drop, y'all. Look at that drop. That's crazy, right? You're probably like, yo, why did I not see this? This is why. Look at gold. Same thing. 15-minute. Let me go like that. What did gold do, y'all? That looked the same to me, don't it? You want me to put it in black and white for you? So you can see? Same exact movement. Gold and AUD USD. Oh, I need to put that in black and white. I need to see that better. I don't like that black color. There we go. I see a lot better now. Boom. This is gold. Okay. Look at that beautiful drop. And now let's look at AUD USD. Looks the same to me. Okay. Correlation. Pair correlation. Very, very important. Now, some people have the thought process, and I'm putting Euro on here because I'm going to go to this. Some people have the thought process that Euro USD is highly correlated with gold. It may look the same. Oops, I did not mean to put it on tick chart. My bad. Symbol. Chart. And I probably should have just created a template for this, but I don't feel like going through all of that right now. So I'm just going to make it look pretty. Now, as I was saying, people may think that Euro USD is the pair that is correlated with gold. And it is not, as you can see. This chart, these candlesticks, don't look like this. Okay? These candlesticks don't look like this. Okay? That's why Euro USD is not the pair to look at when you're comparing it with gold. It is AUD USD. And AUD USD, Australian dollar to the US dollar, is a commodity currency pair. What that means is the economy of Australia is based on their exports of their commodities. Gold, oil, corn, soybean, things like that. USD CAD, dollar to the Canadian dollar, is the same, similar thing. It is a commodity currency pair. So the economy of that country is based on oil, number one, and then gold and things like that, you could see and kind of watch. But AUD USD and gold are at 90% correlation positively. That's what that is. And like I told y'all before, you put a gold chart and an AUD USD chart and they look very much the same. You put gold with EUR USD, it may have moved in the same direction, which is okay. That means they are positively correlated. That's fine. But do not make the mistake that just because euro's dropping means that gold is too. It's reverse. Okay? Gold dropping, AUD dropping, then euro is most likely dropping as well. But I can tell you right now, it didn't drop as hard. Right? So if you was getting in on a trade on Euro USD thinking that, oh, because gold dropping, I'm going to go ahead and make all this money, you were feeling kind of silly right a couple of times. Because this drop ain't nowhere near as hard as what the other one did. Okay? So I'm going to just throw that out there too. So that 415 alert, we're going to go ahead and draw that. Because I don't think we've had any new alerts since. Am I correct in that? Let me just go ahead and see. Are we still good so far, y'all? Any questions?
Yeah.
Oh,
Definitely.
okay. All right.
Or after you do the Aries alert, could you do the same thing with the Fibonacci on the 15-minute?
Yeah.
Cool.
Let me double check and make sure I ain't got no trades from variable real quick.
Oh, you probably do.
I probably do. I know, right? I'm telling y'all right now. And you know what?
I've accepted about 5 since you've been talking.
Oh. Okay. Now this came at 10:57, and it's a quarter after 11 for me right now. That's a half hour, almost a half an hour. I'm not gonna approve that one. I don't like the time frame because gold is very finicky. So we'll see if it gives me another alert. It should. I just heard my phone beep. Go ahead and approve this one. But you know what? Since I do not see a Nas one, that tells me that NASDAQ's probably in drawdown right now. So it's going to be a while for that thing to come up. Let's do Eris. And then let's do that gold. It came at 415. I mean, excuse me. AUD came at 415. So I'm going to put my little horizontal line. Let me find 415. Mine is 6. Let me see. What time is it here? My bad. This is 18:15. So this is a 7-hour difference. So that's 2:45, probably right here. 7, that's 5:15, 4:15. Right here. Okay. This is that 4:15 alert a.m. Eastern time. All right. So if I was up at that time, because I'm asleep, but if I was up, I see that alert and I come in, I'm like, well, look at this. This thing is on a whole downtrend already. So I'm not sure if this is a breakout to a trend change or if we just going to continue this breakout. I mean, this downtrend. And I got way too many candles telling me that we continuing. But we're going to go through my little process. So this is the alert when it came out. And the way I do it is I do a horizontal line on the candle before on the 15-minute chart. And I use right there at the top. Oops, excuse me. That's the alert candle. This one right here. And then a horizontal below. All I did was create my own supply and demand zone, pretty much. Took me a minute to even figure out that's what I did. But my guy Ulysses, he my little trading partner too. He was like, he's the one that actually told me to change the way I was doing it a little bit and had me put both lines up because I was just going to do one because I've been back testing these. And by the way, when I did these wedge alerts, y'all see that's in here? I went back and drew all these wedges, okay? That's 316 pages. I went back and did them all for the time that I was trading. And I was trading New York session and some of Asian session. So anytime an alert came out in those hours, like starting from like 5 a.m. to the end of the New York session, I drew those wedges. I drew those lines, every single pair. And it's particularly gold too. I have the same thing for gold. At the time when I did it like a month ago, I had like 90 different ones. And then I did all the rest of the pairs, there's 6 of them. So I've done over like 2,500 wedges, drawing them, by the way. And I did it because I wanted to back test strategies. Every time I do something, I back test to make sure the thing worked first before I even go ahead and do it live. I demo everything first. But here's my 2, and then I just wait for the breakout. Now, here's a couple of things, and I'm gonna just go ahead and attribute Sam to this one. Okay. Sam made a good point that since things had slowed down, he was take a trade off of the 15-minute chart. So I'm gonna do this in 3 ways: 15, 5, and M1. That's my alert happening on my other thing here. So don't worry, but that's something else. But anyway, so what I look for is a candle closure outside of my trend lines, which this one did. These are the 15-minute charts. And then I look for the next candle as a confirmation of breakout. So I would want this candle to still be bearish, okay? Or it needs to not have touched this trend line, and it needs to not have touched that trend line, and it needs to close outside the trend line. Those are my 2 main things. The fact that it would be bearish is an additional confirmation, but not required. I had to figure that out lately. Okay, so this candle is a confirmation of breakout because it did not go back up and touch this trend line, and it closed outside of it. We good to go. This candle right here, trade candle. This is where you're getting in at. Opening. Okay, so when you get in on that trade candle, I'm gonna go, so the high open is at 71246. All right, now on these you usually can go for like 5 pip and dip, right? Or 10 pips. When it's on the 15-minute chart and you're doing entry, I actually bring my pips up into 10 to 15 I'm collecting now, and then dip and roll out. Okay, but so here, 71246, 15 pips, 10 pips is 714. So 15 pips is 7109. Okay. Does it get down to 7109? Yes, it does, as we clearly see it does. But that's my trade candle. But I want you to see when it gets down, offer-driven emails, as well as 82 pips, 8.2 pips. That's what that means here when you're on the currency. So I don't hit my 10 to 15 pips yet. It comes back up. It gives me a little drawdown. I'm only in like 2 pip drawdown. And then after that, it drops down again and boom. It goes 20 pips. It keeps going and going and going. Okay. But if you only in here just to catch 10 to 15 pips, take your 10, 15 and dip and keep it moving. You know, I do 2 positions on this. So I would just do the first position is 15 pips. Uh-oh, here's somebody in the background. I don't know who that is. That's background is there, but if they can mute, that'd be great. But other than that, let me see if I could do this. There we go. Cool. Thank you. But that's about it. 10 to 15 pips and that's it. No, and I could tell y'all ain't see, what do you see on this chart? You don't see no RSI. I ain't got no trend strength. I ain't got nothing on this chart except for what? 3 lines. And that's basically because I can't draw. Okay, I'm gonna tell y'all right now. If you ever see my YouTube videos, the wedges I used to draw was crappy. I could never catch the wicks the way I wanted to. Angles was all off. I said, you know what? Screw this. 2 horizontal lines. And I always saw that this last candle was important. And that was from me drawing all those wedges. So all them hours and weekends I spent drawing those things, that's how I came up with why that candle was important, and is why I chose to do it this way. And that's off of the 15-minute chart. Same thing. And that's actually the same strategy for gold. Okay, I do the same exact thing, and I take my trade off of gold. Candle closure, Next candle, long as it don't come touch this line, I don't want it to touch it. I don't want no going inside of it. None of that. If it does that, it cancels the breakout. Then you got to restart your confirmations all over again. Okay? That's why I don't just go breakout trade, because you can get it could be a false breakout. So that's why I wait. You got to wait and confirm your trade first before you just jump in. Otherwise, you gambling and you hoping that it goes in your favor. At least if I could confirm it with some thought process behind it, I'm not gambling anymore. I'm taking an informed opinion of a trade to go in a certain direction versus me gambling it. That's what that means. And that's the same thing for gold. Same strategy for gold off of the 15-minute chart. And my gold, I'm at 90% accuracy. Actually, matter of fact, off the bat on these wedges, I'm on 90% accuracy. Okay, I just focus more on gold now because why? If I'm going to do this for a currency pair, why don't I do it for a gold alert and make more money? Now on gold, I'm shooting for 25 pips. 25 pips on gold ain't nothing but a $2.50 move. Gold can move $2.50. Y'all just saw on the variable multiple times. So if I'm just going for 25 pips, pip and dip. That's it. Okay? And that's just how my strategy works. And that's pretty much it on Eris when it comes up. Now, the gold alerts on Eris don't come up as often as the currency pair one does. So that's one thing you might want to just take into consideration. But I focus more on one thing. So when you do those alerts, and I would say the alerts are really great. They're really good for you to learn how to manually trade. So that way you learn how to start looking at candlesticks and stuff like that. I mean, when that alert come up, it's 4 a.m, you trade during London session, you see all these candlesticks and bearish, I would say more than likely this thing is continuing on a downtrend. You know, just the thought process, just looking at these candlesticks. All right. And the same process works on the 5-minute and on the 1 minute. It's just that it's more riskier if you follow that same strategy on the lower time frame, because you could fall into a false breakout. So Sam mentioned it about doing it off of a 15. When I was telling him I was like not really focused on Eris alerts, and when he mentioned that, I went back and back tested it and I saw that it worked better. Even if and remember, I'm saying this is 85 to 90% accurate, so you are gonna have some losses. So don't act like every strategy is gonna be 100%. You're gonna win every single time. No, that's not how trading works. Okay, but when you do lose, make sure you mitigate your loss with your stop loss. I don't put a stop loss on mine. I just keep it in mind. I try to make my stop losses anywhere from 7 to 10 pips. That's real tight. And when I have a tight stop loss like that, that means I could trade with a higher lot size, because I'm willing to go ahead and just accept this minimal stop in order to make big pips. That's what I do. So that is Eris. Any questions on the wedge alerts? And I do got YouTube videos on this too. And this is also being recorded, so I'll make sure I show this with y'all later. Any questions on Eris? No? We good?
I think everybody good.
Oh, okay. Well, let me go check on let me check on variable real quick. Hold up, let me see what's going on over there. Yeah, Nas is still going. Yeah. It's in the... Oh, look at that.
It's coming down.
Coming down. So it was in drawdown. Remember, I was
Yeah,
like, man, I ain't had no trade alert on that for a minute. So I know that was in drawdown, but gold cleared up. So let me go ahead and take this next gold notification. And back also on Eris, I have my preferred pairs. It's 11:27. It's only been 2 minutes. I'm going ahead and accept this. I have my preferred pairs on Eris that I like to. Oh, I'm sorry. That's because I hit that twice. That I like to trade. I already said I like gold. You already know I said I don't like Euro USD, so I tend to ignore those when they pop up. Dollar Swiss, yeah, it's all right, but I do like AUD USD. But GU be hitting it. I'm gonna tell y'all right now, GU is on point.
Love GU.
And in any session too, even in the Asian session, which I found was nice. But oh, I want y'all to look at this real quick. This is how I don't post as much on Eris anymore, only because I'll be doing other things, and I usually only post on the gold alerts because that's what I'm focused on this. Not to say that I'm not trading it, but I usually do gold. But I will do Eris if I see something like this. When I see two come out at the same time, that signifies momentum in the market. Okay. And I'm like, okay, we got some movement going on, and these two are correlated. This is USD CAD. I wouldn't like this time for this pair, only because it's a US pair, and most of the time people are asleep. But what I would do is look at oil, and I would see if oil is moving, then I would trade it. But GBP is a no-brainer anytime. This right here, I need y'all to see this. Look at these three came out at the same time, 45 minutes earlier, right? So we had a GU, EU, and a USD CHF. GU right off the bat will probably be the one that breaks first and would have made you your pips. EU and dollar Swiss, those two are negatively correlated, but highly, meaning when this go up, this one's going down, and vice versa. You look at those charts on those two, that's where you see that correlation. When Euro was coming down, then dollar Swiss was probably going up. Okay. And then, but not pound dollar and dollar Swiss. If it looks like it's okay, that's just something maybe happening in that time frame that they moving, but not all the time. Which also, I will say this, Euro dollar and pound dollar do not always move in the same direction. Sometimes they do. At different points of the day, they do. But I would not say, just because I see a Euro wedge and a pound wedge, whichever way Euro's going, I'm going to go the same way on this. No, no, no. That's not the case. Because more times than not, they're going opposite of each other. Okay? You want to know why I say that? Because there's a currency pair that handles that. It's called Euro Gbp. So if you're trading Euro GBP, what does that mean? If Euro's going up, then that pair is going up. If pound is going down, then that means that whatever currency pair is first, that's the one that's leading it. So if it's in a buy and it's going up, that means Euro's going up. That means pound's going down. Because when you see a pair like that, that tells you that these two aren't going to always move in the same direction, so you would not trade them in that way. And let me go back here so I can show y'all what I'm talking about, because I know I'm talking and it might be like, no, I need to see a visual. Let me hide that so y'all can see. Let me open up my symbols. So I don't like to see all of them. Here we go. This is the pair right here. Euro to the British pound. Because I have that pair as a currency pair that people trade, these two ain't going to move in the same direction all the time. So you don't automatically just trade them together like that. If anything, they will move opposite of each other. So when this pair is going up, that means pound is going down. All pound pairs. When this thing is going up, all Euro pairs are going up. Okay? That's something y'all need to pay attention to too. You want to know another one that does the same thing? AUD USD. Same thing. They do not move in the same direction together at the same time. No, no, no. It may happen sometimes, but majority of the time, they are opposite. So you ain't going to trade these together. They're going to be opposite. But I will tell you this is another thing. I'm dropping all this correlation knowledge to y'all because it's important when you are trading with variable, because what did the sign tell y'all? You need to go in there and look at correlation. So the pairs that you choose to trade with, they all interact with one another. So do not put AUD USD on there and NZD USD on there and think that they always going to move in the same direction. It ain't going to work that way. Sometimes they will, though, because they're both trading against the US dollar. Okay? It's always based on what that pair is actually trading against. But this thing right here, NZD and GBP, those two typically move in the same direction, especially when they're going against the US dollar. So when I see a wedge alert that has pound and New Zealand dollar coming out at the same time, oh, I get happy. I'm like, oh, okay, we got momentum going on. And those two move really fast. So those are just a couple of knowledge things I wanted to drop for y'all. Um, that's kind of about it on that. But then it's 11:30. Y'all still got some. I got a half hour left, y'all. If y'all wanted to talk about more errors or variable, or did you want me to do that Fibonacci on the 15
Yeah,
minutes?
can you do that Fibonacci real quick for me? That joke just crazy to me because like I've really been trying to learn that for so
Oh
long,
man. Okay.
and you literally broke it down for me in less than 5 minutes.
Oh, I'm glad. Can I tell you, only been trading with it for like 2.5 weeks.
That's crazy.
I was Googling like a mug though prior to that. All right, so first thing you want to do is you want to establish your trend. All right, so you already know your overall trend on, this is on a pair. I'm gonna do it on a currency pair because I said it works on anything. Math works on anything, right? So you want to look at your daily chart to establish your overall trend. Okay, clearly, and this is AUD was on a beautiful trend up, and if you look at gold, gold was on that beautiful trend up too, right? And so here you start to see some pullback. Okay, you don't know if this is a retracement or if it's an actual new trend, but what it did, it just turned into, it was just a retracement. But look at these right here though, they're not as strong going back up, so it probably was signifying, what do we have, a downtrend coming into effect. And then sure enough, boom, that's the hard one. So this was actually the beginning of a downtrend. Here's your actual retracement, and then boom, a downtrend again. All you're doing is you just looking at the daily chart to establish what your overall trend is going to be. So when you go down to the smaller time frames, you're looking for the retracements to jump back in again. So here we go. We got another uptrend as a retracement, down a little bit, up again, down, up, retracement now happening. This was your retracement. We're going down again. This is today. All right. So we already know we are in a bearish bias for the day. So we looking for what? Sells. So we're going to go down to the 15. And here's your 15 minutes. And what you're going to do, you're going to do the same thing. You're going to look for your uptrend, and you're going to look for any retracements. And as soon as you get a retracement, that's what you measure, and you start going down. So right here, this was my highest point, and I see we got down to here. This is my lowest point right here. So I'm going to go insert Fibonacci expansion. Highest point was here, and I'm talking about highest point without interruption. These three all have the same low, so I'm not considering those candles as a retracement. So we're going to still keep going down, 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 down. Okay, lowest point was right here. All right, now with that being said, what we're going to do, we're going to take this little tool, and I said I want my 100 to be that bottom one right there. I want my 100% right there. All right, on a 15-minute chart, here's my retracement. This 15 minutes right here was my retracement time. And then this 15-minute candle, it's going to start going to downtrend. Soon as you've established your bottom, the next candle is your retracement. Go ahead and put your sell stop in. Go ahead and put your sell stop in, because your sell stop could get triggered in this candle for the retracement as it went up, and it can come shooting right back down and then continue the downtrend. Or it could just do what it did, think it was going to finish, and then start going. But put your sell stop in right here. And once you put your sell stop in, boom, go to the next line. That's all you need to do. And then what does it do? This one to this one. That's 24.6 pips. Okay? 24.6 pips. 20 pips on AUD USD, right? And how long did it take for it to happen? 1, 2, 3, 4, 5. We say 15 minutes. So an hour and 15 minutes, 24.6 pips, AUD USD, go ahead, go home. That's all you got to do. And so the 24 pips, you may be like, oh, that's not a lot. But you got to remember, currency pairs are a little bit lower risk than gold. So I can go ahead and put a higher lot size on 24.6 pips on AUD USD and still not be hurting. Because I'm going to tell y'all right now, where was your drawdown at? Where was your drawdown? When it triggered this, where was your drawdown? If it triggered this right here and kept going, okay, and kept going down, you ain't got no drawdown, right? So you ain't hard. So you just took a trade with no drawdown, made 24.6 pips. Come on, y'all. You could put a 0.1 on there. 0.1. 24.6 pips. Easy. Standard lot on there, what's that, $240? 0.1 is $24. Hour and a half, you might be like, oh, that's only $24 an hour, 15 minutes. Okay. Some people work an 8-hour job to try and make $20 an hour. You just did it in an hour and 15 minutes off of one currency pair. And what happens if you have 5 currency pairs that all fit that same category? Now is it funny? Come on, y'all.
Wow.
How that
No,
working for
like
you?
you just literally like broke it down. Like I've taken courses on this and still didn't understand it because like people just make it so complicated. And you just wow, it's amazing. You got a gift. You got a gift for real, for real.
Oh,
You got a
thank
gift
you.
and like teaching. Like it's really dope.
I appreciate that. Thank you. And you know what? I just now looked at that. So that was your low, right? And all you got to do is come to this, take profit here, and then bounce out. Remember, we pip and dip here, by the
Yep.
way. Remember, I'm pipping and dipping, you know. So then what happens is wait for another retracement and see if you could jump in again. Okay. So that's what this part right here is. This right here, these three. So what you would do is you just move this down. Get over there, thing. Grab it. Move that down to my new low. Right. The only reason why you would know that is because the next candle created a higher low. That's what I'm looking for. I'm looking for when a candle creates a higher low. This was that retracement here. So I'm gonna go to the highest point, which was here. Right now, that's that. And let me bring my 100. It's gonna be down to my 0 here. All right. Now, here's my retracement period. Soon as that thing starts retracing up, what you gonna do? Put your sell stop in right here. Put your sell stop in at the 100. What you go, and then it triggers right here, right? It kind of triggers right here. A couple of candles. It takes a couple of 15 minutes, and then it triggers right here, and then it stops. And then what it do? You got a little bit of a drawdown. Boom, drop. And what's your take profit at? Right here. Look at where it hits. It hit your take profit, and then it bounced up. You also got to look at the time too. So at this time of day, you getting into New York session starting up, and you know all this mess starts happening. But you still hit your take profit and you bounce. And what did I say that was? What's that, like 25 pips? Let's do it again. So how many pips did you make in a day? Oh, that's even more pips. My bad. Look at that. From the 100 to that. That's 33 pips. So if you would have followed this from when the first retracement, so we got 24 pips on the first one, and then the same day you get 33 pips later. How many pips is that? 24 plus 33. That's 57 pips in a day. How many pips you supposed to get in a week? 75. This is off of one pair. You mean to tell me you don't have 3 pairs that you could pick, you could do this off of in one day? And you only need to do like a 0.1 lot size? If you do a 0.1 lot size, you got a $500 account, that'll work. If you only have $100, you could do this on a 0.01. On currency pairs, you could do this on a $100 account. You just caught 53 pips or 56 pips or whatever in a day, and you only need to do 75. That's why I be telling y'all, I be out the market on Monday. I don't be playing no games. I don't normally trade on no Wednesday. But I'm going to tell y'all, you could trade on any day. You know what they say about Monday and Friday? Talking about some of those are rinse days. Those are rinse days for people who don't know how to follow the charts. They rinsing y'all because y'all don't follow the charts. Follow price action. Fibonacci, this thing right here ain't nothing but price action. Do you see RSI on my screen? What do I have? Do I even have a support or resistance line on this screen? I don't have no EMAs on this screen. That is straight candlestick movement. That's it. Now, that's not to say that RSI ain't important, okay? I'm not saying that, because I do have trend strength indicator that I got that from Los and them. They got that in the Pipology squad chat, okay? We got that. I got that. That signifies the strength of the trend. That's excellent. I like that indicator. I also do the MA cross. I still have that. That's my bread and butter. I'm not going to drop that. And it don't no matter what period you have in your MA cross. All I use an MA cross for is to signify momentum and a possible trend change. That's all I care about when I throw that on there. So if I got an MA cross at some time at this point, I would have been like, oh, okay, maybe a retracement is about to happen. That's all I care about. I'm not looking for it to give me a signal to take a trade. I'm looking for it to tell me something's happening with the candlesticks that I can't see right off the bat. Alert me. That's what the software is supposed to be there for. Alert you. And then you go to the chart and go ahead and make your trade. The EAs are going to do the trading for you. You just hit the button. When you manually trade, utilize the software to alert you so that when you go to the chart, you ain't got to sit here and try and figure out all this stuff. Take the information that the software tells you, bounce off of that with what you know, make your trade. That's what I was saying, because this right here, you have to sit here and wait for that. You know what I mean? And that's okay if you got time to do it. I got time to do it. That's why I can do it. But not everybody don't. So that's one way you use the software. You're welcome, darling. I love you too, Jessica. Anyway, how y'all feel about that? I'm telling y'all, and I'm telling you right now, I just learned this 2.5 weeks ago. I've heard about Fibonacci, but I didn't really pay attention to it because I didn't feel like it was worth my time. When I started trading with this these last 2.5 weeks, and I've been doing this off of indices, which is why I was on S&P 500, which is why I caught them trades. I said, okay, because I'm also doing this for what? My challenge account. I'm trying to get 50K. So I need to pay attention. You can't trade somebody else's money without knowing manual trading. I know you could probably put variable on there, but when you trade with a funded account, they have rules you have to follow. You can't go over a certain drawdown. So if a variable is going to make me hit $500 drawdown and the funded account is telling me you can only go up to 1,000, I can't use variable for it. Okay. Or I can't use gearbox either, you know? So especially if you have to put stop losses in there, sometimes they count your stop loss as a part of your potential drawdown. So I can't use that. So you have to manually trade in order to trade a funded account. You can get the funded account and utilize a bot afterwards, but in order to actually acquire it, my recommendation, manually trade. Second recommendation, pick the simplest strategy possible to trade with. This right here is simple. What you're doing, going from line to line. That's it. You don't have to do anything else. Just line your stuff up right. And the only way you're going to line your stuff up right is if you do what? Study candlestick movement. There's a candlestick Bible that talks about candlestick patterns. You don't really need to do that to just look at a chart. That's it. Just start to recognize what's a downtrend and what's an uptrend and what's a retracement. That's all you got to do. Practice it though. It ain't going to come to you today if this is your first time looking at it. It ain't going to happen. You're going to have to do this multiple times. But what you do is when you're looking at a chart, you're going to start to train your eyes to see what the candlesticks are doing. And when you start to train your eyes to see it, you can clearly see the pattern. This right here technically is a wedge. This whole retracement is a wedge that was forming. And then what do we have? Breakout. And this is on AUD USD. That's why that alert came out. Okay? So the wedge alerts, they're not for nothing. Even if it came out and there was a breakout already in place, what did it do? It alerted you to the fact that there was a wedge formation pattern, which happens all the time. Okay? And it tells you breakout is about to happen. We got momentum going on. It's either happening right now or it's about to happen or you're in the middle of it. You know, that's what those wedge alerts are there for. That's why they're powerful. And if you utilize them and you go ahead and trade with them, you're going to catch your pips. But what you do is you find a strategy. So the strategy I just gave you was 10 to 15 pips, my strategy with the horizontal lines, right? Now, take that strategy, add the Fibonacci I just showed you. You don't think you could stay in that trade longer now? Remember, that trend started up here. You got your alert around here. It had its breakout. When you had your breakout, and if you would have drew that line, your Fibonacci, you would have stayed in the trade longer. You would have caught more than 10, 15 pips. You would have caught like 30, 40 pips. That's how you utilize multiple information about trading to enhance your trading. That's why I always say we use the software to enhance our trading, not to just trade, but make it more efficient, make it more profitable, make it enhance yourself. So that way you got a one up on other people that don't have it. I'm sorry, I know I'll be preaching, y'all.
Preach. Oh my God.
Let's see, how do you qualify for a traded account? Different companies have different rules. I go to 3 of them. I have a live funded account right now with one of them, but they only do currency pairs. So that's why I'm about to drop it and go to FTMO. They do everything. They allow me to trade indices. That's why I'm doing that one. But if you message me on Telegram and I will give you their qualifications. But I'm gonna just tell y'all right now, if you can prove to me, and you would have to prove it to me, because I'm gonna tell y'all this is the qualifications, and if you prove it to me, then I could put you in there. Prove to me that you could take an account. It don't matter what the account size is, but you need to be able to take an account. You need to make 10% net profit within 30 days. 10%. So if it's a $100 account, you need to show me you can make $10 in 30 days. You cannot go over a 0.5 on a 15K account, and you cannot go over a 0.05 on a $100 account. So those will be your lot sizes that you have to maintain, and you cannot go over 10% drawdown maximum closed trades. If you could prove to me that you could fit that criteria, you can get yourself a traded account. And you got to trade a minimum of 10 days, by the way. Same thing. That's it. Those are your qualifications. Prove to me you could do that, and I'll go ahead and put you through to them so you can get you a funded account. Does that help? Yep, they do exist. You do got to pay for them. They ain't free either. So that's how they get you. That's why I said you got to prove to me that you could trade it. If you could prove that you could trade it and you can meet those qualifications, and then when you pay the money to take the challenge, I know you'll pass. That way you ain't wasting your money. And what happens when you pay for them, they'll fund you your money back, because they're going to give you your money back when you fund with them. So I'm trying to tell y'all, instead of spending money for these challenges to get these funded accounts that you ain't going to pass, I gave you the qualifications that you need to be able to prove that you could pass it. So you ain't got no problem paying that money, and they'll refund you your money back once you make their profit. That's it. And then different ones do different things. Like I said, one of mine does double in your accounts. They started at 15, now it's at 30K. Same thing. But like I said, they only do currencies, and I'm going away from currencies. So again, the energy that I just put into this AUD, I could have put that in S&P, which is what I did. So that's why I'm going over there. But yes, darling, Porter, practice that Fibonacci. If you could do this Fibonacci right here, go from one line to one line, that's all you need. And do that on any asset, because it works. I just showed y'all it works on S&P, it works on AUD, it'll work on a metal, it'll work on oil. It don't matter. And the best way is when it's trending. So the asset also has to be trending. That's the best time to do it. If it's ranging, where it's just kind of looking like this, actually, see this crap that happened the day before, it'll work, but it ain't really that great. This is where AUD didn't know what it wanted to do until it decided to make a choice, and then it did that. So this is what you're looking for. When people are looking for them M's and W's, that's what you're looking for. Things like that. Trending assets is what this works best for. And the indices are always trending. One of them is anyway. So that was that. On a 15-minute, hour, daily Fibonacci. That's it, line to line. Like I said, there's more advanced ways to use that I have. I actually have multiple levels, but I ain't showing y'all all of that right here because that takes even longer. And we've been on here for almost 2 hours, y'all. I can't believe it. I talk a lot. Come on, y'all. Any questions? You anything else on y'all mind? Y'all got me
Hey,
for another 5 minutes.
you gave that sauce. You gave that sauce. Oh my goodness.
That's what's up, Sam.
Shoot.
Let me check and see what we got going on here. Let me see if I got another NASDAQ waiting for me. Let's see. Oh, this is Aries. Hold on. Let me see if we got new. We don't have no new Aries alert. No? Okay. I wouldn't expect it today. Did y'all notice that today was a good day because there was no US news? Did y'all notice that? It was like nothing in there to stop any momentum. I thought that was excellent. And by the way, oh yeah, see, so another $50 was made for sure. Look at that. There go my NAS. 11:31. Ooh, I shouldn't have accepted that. That was almost 20 minutes ago. Well, I'll just accept both of them. We'll see what happens. I'm still in demo. Um, Next week is the presidential election here in the US. I know a lot of people are saying that they're not going to trade. I'm still trading, but I might not have as high of a lot size, and I probably won't go for as long of a run in pips. That's how I'm going to attack the markets next week. I'm going to do that. And I'm only doing that because I love volatility. I love it. I make my most money trading when it's volatile. Okay. That's me. Other people don't like that. And it all depends on the kind of trader you are too. So everything that I'm saying, it might not appeal to others because that might not be the kind of trader you are. And that's fine. We all different kinds of traders. The point is just to take the information. Oh, there's another 50 about to happen. Just take the information and let it absorb in your arsenal to see how it helps you, if it does. I hope it did anyway. But that's it. But I don't trade on Thanksgiving week. So there are weeks I don't trade at all. I don't trade on Thanksgiving week at all. And I don't trade on Christmas week, and I don't trade on New Year's week. Those are the only 3 weeks out of the year I refuse to trade, because out of the 4 years I've traded, each and every time I have gotten rinsed. And it's because those are such time, there's not a lot of liquidity in the market. And I was trying to figure out I can kind of be smarter than the market or not. And no, it didn't work out that way. So just to let y'all know, those are the 3 weeks out of the year that I personally don't trade. So you will not be seeing me up in the chats posting any results or anything like that during those 3 weeks. Okay. Anything else? Anything on your mind? Hopefully this helped.
Thank you so much. That's all I gotta say.
Oh, you're welcome,
Thank you
Sam.
so much.
Did we keep everybody? Well, I know a couple of people already dropped off and everything, but hopefully it was helpful.
Missed out.
It did get recorded too, so part of it is gonna be available. The first half hour that we talked, it wasn't, but from here on out, it is. Um, but other than that, you guys, so that's it. And it was an impromptu session, by the way. So I just kind of did it because I had time to do it. Maybe the next time I'll be able to give more notice if I have some time to do it because of my kids. So it's really hard. Right now, it's looking like Wednesday and Fridays might be good. But, Wednesdays ain't always the best day because of news and stuff like that. It just happens to be a really good time. All right, y'all. Well, I'm going to stop sharing and I'm just going to keep demoing variable, and I'm going to see when the other ones come out because I am going to demo each and every one. I just am only going to demo one at a time because I want to focus. Honestly, that's how I test EAs. So I'm going to be on variable for at least the next month and a half until I switch to like Gearbox or something like that. Then I'll do that then. So I'm only going to be able to talk about variable, or if I do happen to get into a test group on something else, then I could talk about those. But right now my focus is on variable and the bag indicator. When that comes out, that's the other manual alert indicator that AP's coming out with that I think is good for people who are new and want to get exposed to manual trading. You ain't got to draw a thing. And it's just an indicator. Put it on your MC4 chart. And all I'm telling you is simple. All you got to do is see the arrow, see the arrow, uh, see if there's a bounce off of a support or resistance, take the trade. That's all it is. Okay. Alrighty, so that is it, everyone. Thank you for joining, and I will talk with y'all later. And have a good rest of your day. Y'all
You
take
too.
care. Bye.
Bye.